Oh dear. Yesterday, the Dow tumbled nearly 300 points and the Nasdaq closed lower for a second straight day in a row. No, it's actually third, fourth. Geez, what's happening here? So is the rally over? So how does this affect our positions and what's happening with any new positions? And that's what we're going to talk about. So welcome to Coffee with Marcus and Mark. And today is Thursday, January 4th. And in this show, we're going to talk to you about what's happening in the markets and how we are trading it. And geez, I mean, now we really need to take a look at it at the Nasdaq. I think yesterday was 4 days down in a row, right?
Yeah, 4 days. Today, working with number 5, potentially trying hard to go positive. But yeah, what a drop in the Nasdaq to kick off the new year.
Yeah, it's basically because last year the Nasdaq was up like what 40% or something like this. This were kind of crazy. I think it was 44%. So at some point there's some profit taking, and this is what we are seeing here right now. So people are seem to rotate out of the fabulous or magnificent seven. If you go over here to our chart, we see that well, the magnificent seven are Microsoft, Apple, Tesla, Amazon, Google, Meta, and Nvidia. I mean, those have been really driving last year a lot of the growth that we saw in the indices.
Absolutely. Just leading the way, leading the markets higher, but nice to see some green elsewhere. And I think that that's good, and that's what we're seeing after such huge gains from that magnificent 7 last year.
Yeah. So right now the focus is on yields. I mean, yields are back in the spotlight, and this is where we talked about it. The 10-year yield. I mean, a few days ago, scratching the magic 4% mark. Let me use a different color here. The 4% mark, and even this morning, just briefly, topping 4%. So yields on the rise again.
And that definitely has the potential to put some pressure on stocks. We saw that last year, and I don't think that's really what investors want. And so, well, I know that's not what investors want. Let's get yields down and have free money again.
Yeah, that is the plan. However, this is where we also had yesterday the meeting minutes, the Fed meeting minutes that were released. And I mean, what we saw in the meeting minutes is that the Fed officials say, "Yeah, we are thinking about lowering rates next year, but we don't know yet how and when and if at all, and probably later in the year." So, I mean, reading through this statement, I'll look through this. There was just a lot of uncertainty that basically the Fed said, we don't know yet. We think we did a good job. When can we lower rates? No idea just yet. But we think that we can lower rates 3 times next year.
And this is where the dot plot definitely showed that the Fed is anticipating some cuts, but what the minute shows exactly what we've said all along, Marcus, and that is that the market is overly optimistic at this point, right? If we look at Fed funds futures, like you show there, investors based on CME Fed funds futures believe that the Fed will start cutting in March, and at least based on the minutes and based on what I think that the Fed's likely to do, I think that's premature and aggressive.
Yeah, especially since the Fed said, okay, 3 rate cuts next year, but here we see 1, 2, 3, 4, 5, 6 that the markets are factoring in right now. It's like, okay,
Exactly.
we're kind of off.
Exactly. A little overly optimistic. And I think that that could lead to some volatility this year when the market doesn't get what it wants. But I think it's still going to be a positive year. How about you, Marcus? What are your thoughts?
Yeah, but we were slowing down. I don't think that this year we'll see again a 20 plus percent. I think that we're
Oh, sure.
probably back to the normal 8 to 12% growth that we see this year. That's what I would expect.
And I'm with you on this one. And I saw that Oppenheimer chief market strategist John Stolzfus. I'm sure I butchered his last name, or maybe I did pretty well. Well, who knows? But he believes that the rally in 2024 can continue to about 10%.
Okay, yeah, that sounds about right. That sounds about right. So, I mean, we'll see. Bitcoin this morning on the rise again. I mean, after pulling back almost 10% over the last couple of days, trying to attack the 45,000 level again.
Getting up there, 44, on the way to 45.
Yeah,
Definitely some volatility the last couple of days, and yesterday down more than 4.5%.
yeah.
But
And
bouncing back.
crude oil all over the place with everything that is going on. Where is it in the Red Sea?
Yep. Yeah, just trying to figure out the risk there potentially, and if there will be some supply issues. Yesterday, crude oil jumping nicely, up 3.5%, but today pulling back down 1%. Trying to figure out where we're at between the $70 and $75 range.
Yeah. So that's what's going on overall in the markets. Now let's take a look at our positions, and then should we talk about the WTF trades? What do you think, Mark?
You know, yes, but I think it's important to mention the economic calendar.
Oh,
We
of
didn't talk about
course.
jobs, right?
Geez, yes, we had a few reports coming out
Sure.
this morning.
I,
Almost forgot
and
about
I
this
think this,
because they were kind of a non-event.
I agree. I agree. At least the reaction pre-market, it seemed like traders kind of looked at the data and said, "Eh." But you see there that unemployment claims come in a little lower than expected. So 202,000 people filing for first time unemployment versus the 217 that was expected. But ADP non farm, this was a bit of a surprise with 164,000 jobs added compared to the 120. And we know that there isn't always a direct correlation between private payrolls and then the non employment or non farm employment number on Friday. But it'll be interesting to see if there's if the non-farm employment number increases more than expected as well.
Yeah, because
That
right
was a
now for
mouthful.
tomorrow's big jobs report, the markets are factoring in that the unemployment rate is ticking up 0.1% higher,
Yeah.
and that the average hourly earnings are ticking lower. Right now, based on what we saw yesterday with the JOLTS report and the unemployment claims and non-farm employment claims today, I mean, it could be that the unemployment rate remains at 3.7% and it's not ticking up. Also saw that this
Yeah.
morning the wage increase year over year is 5.4%. And even though this sounds high, I mean, it has slowed down. So it's not concerning. And wages are catching up with inflation right now.
I also saw with today's report that leisure and hospitality was leading with 59,000 new jobs added. And interesting to see that small businesses actually were the biggest job creators with that report, with businesses with fewer than 50 employees adding 74,000. So small businesses seem to be doing okay.
Yeah. All right. So now let's take a look at our existing positions and then about the WTF strategy, which is not what you think. It is win the fear. So we'll talk about this briefly. We introduced this to our mastermind members over a year ago, to all the PowerX users, I want to say in October, probably. So it has been a few months and there were quite a few signals. But before we go there, let me just clear the drawings here and see what's happening here in our portfolio. CSIQ, I mean, CSIQ down a little bit yesterday, trying to recover, down again today, almost 3% because interest rates are moving higher. I mean, we just talked about it. I mean, topping almost 4% here, and this is not good for our CSIQ position.
And as long as those yields are going higher and interest rates are putting pressure on CSIQ is not going to uh, be rallying. So I'm okay. Like I really have mixed feelings about this one because I'm still interested in doing a rescue, but on the other hand, I don't mind if it just wants to move on up. Um, right now, just sitting and waiting.
Fine with me. And then NEE, I mean, NEE now attacking again the 65 level here. I mean, still a bit away this morning, 62.72, but nicely up today. NEE up more than 1%. So that's good. We have been following the trend line and we see that we do have some resistance here at around 65. And it's time to attack the level to break through. And then we should be able to sell some more calls here.
That's plan, like an NEE.
Good. UPS just diddling around here. I mean, hanging in there. I sold the 160 calls against my existing positions. Right now, it looks that they might expire worthless tomorrow. If so, I mean, I've had fun selling these calls over the last few weeks. Right now, we are trading at 158.14. If we do see a jump tomorrow and I'm getting called away, I'm fine with it. I'm fine moving on with this one. Otherwise, if I'm not getting called away, I'll be selling it again. But I mean, Mark, we're also hoping for you that we are actually jumping higher and going back towards the 165 level.
That is what I would like to see for sure. And although this has been a little bit slow over the last week or so, definitely looks like we're seeing some support around 57, 58. And I'll take that. I'll take that. Now let's just rally on up past 165, make some more money on it.
Yeah. So this morning, super busy morning for our WTF trades because we actually had 5 trades popping up. Now we should talk about it. Because WTF might be misleading, so this stands for win the fear. Because what we are doing here is when we see an oversold situation, we are buying stocks. And this is what we saw yesterday already. So if you look at the open position that we have in fast, so yesterday we saw that after moving higher, 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 fast started pulling back. So yesterday we bought fast. Today, moving up 0.4%. So looking good. These are usually super short-term trades. As you can see, the average and longest trade length average is just 6 days, and that's what we typically see: 4, 5, 6 days. So this might
Yep.
be a super quick trade that we get out of next week, but moving nicely.
And for those of you that are new to the signals, like Marcus said, it's identifying a high probability opportunity where the stock is pulled back and is oversold and is likely to have a temporary rebound. With fast going back to all of the signals that were identified in the past, about a 63% winning percentage, but in general, we're about 70% or even higher. And that's what we see with some of the signals that we decided to focus on today.
Yeah. So that's looking good. And then, yeah, today, I mean, 5 signals popping up. We decided to take 4 of them. So CPRT, Copart Inc., looking good. I mean, we entered it at 46.72. Right now, already trading at 47. So this is exactly what we want to see after a possible oversold situation, a quick bounce back. CoStar Group, what is it? CSGP. Also
GP.
hanging in
Yep.
there right now, slightly higher than the opening price that we bought it at back. Dash doing really well. I mean, Dash, we got it for 93.57. Right now, already trading at 94.90, scratching the 95 here. And then also Picar, after a rough start this morning, pulling back right now. Not yet positive, slightly down here, but I mean, all of these 4 positions are doing exactly what we expect them to do after a quick sell-off, to see a quick bounce back. And you see everywhere the average duration just 4, 5, 6 days.
That is what we expect. Just a quick opportunity to benefit from that fear and jump in and say, you know what, let's move higher a little bit.
Yeah. So we'll see how these do. Other than this, I mean, today, same as yesterday, I've been keeping an eye on oil and gas. it started to look a little bit better now. So we're still keeping an eye on not ZOM, XOM. The 102 strike price a little bit too high. Oxy, no strike price available here, and also Chevron. So those were a few that we kept an eye on. We did have APA popping up on the scanner this morning, because APA today down 7%, which is really unusual, because if you look at the heat map here and we look at oil and gas, we see that right now a few of them have turned negative, so that's good. That might actually find us a trade, but APA down massively by 7.3%.
And this is a little misleading because the drop is attributed to a buyout that they announced. They said that they would buy Callon Petroleum in a $4.5 billion all-stock transaction. So the company doing the buying is normally falling, and the company being bought is usually going up. And in the end, it could be that it was a great decision, but in the near term, that's causing or leading to that drop.
Yeah, I want to bring up COP. Now, also the strike price a little bit too high here. We want to see it at a recent support. So right here, would like to see a strike price closer to 112, 113. Right now, the strike price that is available, if we're zooming in here, is somewhere around between 117 and 118. So a little bit too high here. But with crude oil falling, I mean, we might actually get an opportunity in these energy and gas plays for today.
I'm keeping an eye on it.
Yeah. All right. So let's see what the indices are doing right now. If they are, oh my gosh, they are half turned around. Even the Nasdaq coming off the lows positive for the day right now on absolutely no news other than maybe at this point money is sitting on the sidelines, wants to get back into the markets. Hey, I'll take it. No worries.
Works for me. Snapping a 4-day losing streak if it could stay positive.
If it can stay positive. Yeah, and then tomorrow we have the big jobs report that could move the market. So we'll be here. If you enjoyed today's show and also learning more about the WTF trades, the win the fear trades, give us a like. We really appreciate it. This way we know that this is interesting to you, and we'll talk more about these kind of trades. Feel free to share this with others who might be this beneficial. And if this is your first time here, click on subscribe, hit the little notification bell. This way you get notified whenever we go live. And we'll be back here tomorrow morning to let you know what happened with the jobs report and how the markets are reacting to it and what our positions are doing. Also, if we find any more positions today. All right. With that said, we'll see you tomorrow. Have a great rest of your day.
Happy trading, everybody.